Tesla. It was just a short, about 10 days ago, I let everybody know on the channel that you got to be prepared for Tesla's sentiment to change very rapidly. As somebody that's been a shareholder of this company for years, I've seen it several times where this company goes from unbelievably bearish sentiment around the stock to unbelievably bullish, and it happens before you even have time to react. And that is exactly what we have seen play out over the past week or two at this point in time. A rapid sentiment change, Tesla stock up over 15 percentage points here today. There's massive things going on all over the place in regards to Tesla, Elon Musk, the Supreme Court actually siding more with Elon Musk against the SEC and more in favor of free speech. Tesla founder Elon Musk visits China as competitors show off new electric vehicles. Tesla CEO Elon Musk met with a top government leader in the Chinese capital on Sunday. A lot of people were not expecting that. Tesla soars on tentative approval for driving system in China. I don't think a lot of people understand how massive this is for Tesla, and a lot of people see the stock up so much and think, why is it up so much? I'll go ahead and explain that in today's video. Sofi stock down massively here today, down double-digit percentage here today. Sofi beat on earnings per share. They beat on revenue. Stock price down here today. PayPal stock looking pretty bullish going into earnings. Three core subjects I want to speak about in this video here today. Tesla game changer, okay? We're going to speak about why this matters for Tesla stock so much, why were people bidding this stock up so heavily today, why were the shorts running for cover. We'll speak about all that, and I want to explain that in detail on exactly what's going on there so everybody can really wrap their head around how much this changes Tesla's future, okay? Then we're going to get into Sofi. We're going to talk about Sofi stock, huge things that are being missed in regards to Sofi all over the place that I got to talk about. And the third subject we'll speak about shortly is PayPal. PayPal earnings are tomorrow. We'll speak about that stock for just a moment. I need everybody that's watching this video right now to do me one huge favor, and that is to smash that like button down there. That is all I ask from you guys in return for this video here today, folks. I appreciate y'all. If you need access to my private group, if you're looking to apply to join there, get access to everything I got up here in my bald head, then click the pinned comment down there, fill out an application. We'll see if we can get you in there next week or maybe later on this week. Access to all my best course curriculums, access to the Discord chat with the 6- and 7-figure members, all that good stuff, okay? Alrighty, so before we get into Tesla and what's going on here, I need to tell you three things, okay? Tesla's a messy stock. It's always been a messy stock, and it's also a great performing stock, okay? These are just things to kind of keep in mind in regards to Tesla stock. Now, this is huge. Tesla reaches deal in China on self-driving cars. Elon Musk met with the country's premier, a longtime Tesla ally, and secured regulatory nods in a necessary partnership with the Chinese tech company Baidu. Now, and I told you guys this in the past, like, you know, they love Elon over there in China. They really love Elon in China. They have tremendous amounts of respect. I can't think of a businessman who lives in the States that China respects and likes more than Elon Musk. I actually can't think of anybody they really like. I mean, I think they get along decent with Tim Cook, but I mean, there's a different level of love and admiration for Elon Musk in China, okay? Tesla has concluded a series, and this out of, if I recall, this was out of the Wall Street Journal, or New York Times. Tesla has concluded a series of arrangements with regulators and a Chinese artificial intelligence company during a quick trip to Beijing on Sunday. And Elon Musk, Monday, by Elon Musk, the car maker's chief executive, potentially clearing way for the company to offer its most advanced self-driving software on cars in China. Tesla has faced a couple of hurdles to offering the latest level of autonomous driving, which it calls supervised full self-driving. It has needed approval from Chinese regulators who questioned whether the company took adequate precautions to protect data. That's the key, the data. And has needed, not like safety, data. And has needed access to extremely high-resolution maps that the country offers. The timing of Mr. Musk's trip was significant. He arrived in China days after he identified self-driving technology and artificial intelligence company as critical to Tesla's future. Tesla's not just a car company, Mr. Musk told investors last week, saying we should be thought of as an AI robotics company. Approval of the technology in China would give Mr. Musk a much-needed win after regulators in the United States issued a harsh assessment of the system's safety and performance in a report on Friday. Mr. Musk flew on his private jet to Beijing on Sunday morning and met almost immediately with Premier Li, China's number 2 official after Xi Jinping. This is not like this is just some random guy you met with in China, okay? The number 2 after Xi Jinping. Mr. Li is a longtime ally of Mr. Musk, who has served as the Communist Party secretary in Shanghai, helped clear the way for Tesla's construction there of what is now the country's largest assembly plant, right? And like I told you guys, I've been watching business in China basically since I got in the market 15 plus years ago. I've never seen the carpet rolled out as well as it was really for Elon and Tesla overall over there. The government-linked China Association of Automobile Manufacturers later announced that Tesla and 5 Chinese automakers had obtained approval from authorities in the association for their data security precautions of dozens of car models. The rules bar automakers in China from using software that would identify the faces of anyone outside their vehicles and include many other restrictions. Self-driving systems use cameras to guide vehicles. Now, if you're wondering, what are the other manufacturers that got allowed to do this as well? The cars include Tesla's Model 3 and Model Y. The 5 Chinese manufacturers included BYD, which is China's dominant electric vehicle company. When it say China's dominant electric vehicle company, that doesn't mean Tesla's not dominant in there. It just means of China's companies, like BYD is the big dog. And Tesla's primary global rival, and NIO, a longtime player in China's auto sector. Tesla has run a data center in Shanghai for the past 3 years that handles the extensive information accumulated by the cars it has sold in China as they navigate the country's roads. China has tightened its data security regulations in recent years to severely limit information from leaving the country. Tesla has separately concluded a deal with China's largest tech company, one of their largest tech companies, Baidu, to obtain high-resolution maps of road lanes, according to a person familiar with the deal, who is not authorized to speak about it publicly. Tesla cars in China have used Baidu maps for 4 years for basic navigation, directing drivers where to turn, but have not previously had access to the higher resolution maps. Okay? Now, this helps Tesla in 3 massive ways. It's not like it's just one thing. It's 3 massive things all at the same exact time in regards to Tesla and how this is going to help Tesla in their financials and everything like that. Okay. So first off, this helps Tesla massively when it comes to branding. The fact that now Tesla could offer full self-driving in vehicles. Here's the deal. Okay. In China, the Chinese, they love futuristic tech. And there's really nothing much more futuristic than a car driving you around and you not having to do anything. And so from a branding standpoint, this is another just huge vector for Tesla, because now Tesla is seen as like this company that already has a great allure around it in China. But now that you're talking about full FSD, I mean, that's just like, for the Chinese, this is absolutely massive. They care way more about this than we care in the United States, just to be honest. We've always had a culture in the United States of some pushing back against technology, right? We have a culture of, like driving in the United States and hitting the open road and us driving, those sorts of things. In China, just culturally, there's some things that are different there. And so I think this is going to be massive for branding. It just gives another cool catalyst on why Tesla's such a cool brand and why you'd want to buy a Tesla in that, okay? So that's the first thing. The second thing here is training of the FSD models, right? If we're talking about we've got Teslas on the road with full self-driving, well, guess what? In its massive amounts of Teslas, we're talking about those training systems are going to be able to be trained more and more and more and more and more, right? More problems can come up. People can give feedback. Tesla can take that feedback and fix the systems to become better and better and better. Now, there is one question I have in regards to this is, from my understanding, Tesla's using a lot of the most advanced NVIDIA chips for training the AI models. Now, in China, how are they going to do that? Because in China, it's not really allowed to have the highest forms of the NVIDIA chips over there. So I don't know how Tesla's going to get around that, but if there's one company that can find a way to get around this, it's Tesla. They find ways to get around systems. They find ways to get around rules and all types of different stuff. They find ways to get it done, okay? And so at the end of the day, I was thinking about this and I was like, man, I wish all that data could be used with the NVIDIA chips, which Elon's hoping to get to 85,000 H100s by the end of this year, right? And I'm sure he's going to want a bunch of the H200s next year as well from NVIDIA, as many as he can get his hands on, right, for the training of the models. So I don't know how Tesla's going to get around this, but if there's one company I think will find a way to get around this somehow, I think it's Tesla. But the bottom line is the training of these FSD systems is absolutely massive, right? And when you think about where's Tesla's biggest market, it really is in China, right? Look at the Shanghai capacity. I mean, they could build nearly 1 million vehicles a year at the Shanghai facilities. That's insane, right? That is the big dog. And so if you're thinking about full FSD getting out there in China, I can tell you the cumulative miles driven would skyrocket in the biggest way possible. The AI training would skyrocket for Tesla overall, and this would help, once again, Tesla become the first, what I call, true FSD company that can deal in all sorts of cities, states, environments, construction, whatever, pedestrians. Tesla's on its way to doing that, and this is just another stepping stone for them to get there, okay? And so that's massive. Third thing is services revenue in Tesla's margins. This can help out immensely by having the full FSD over there, right? If they offer it at $99 a month or whatever they offer it at, I assume they would do it at $99 a month like they've done in the United States, right? Because once again, if you have the money to be able to pay for this, I think a whole lot of people are going to be signed up for this FSD overall, and that will help out services revenue, that will help out margins immensely, right? Which Tesla, the big negative for Tesla really the past 2 years has been what? Margins going down, profitability going down. Well, now with full FSD in China, if anything, that's going to help out margins in 2025 and beyond and help out profitability immensely. Because when you're talking about that, right, if you're signed up for $99 a month, it's not like it's any additional cost really to Tesla. It's all just an over-the-air update software, right? The hardware is already on the car. It's not like they got to switch out this and switch out that. Nope. Elon's made it so all those cars for years, for really the past, like, I guess, probably 6-7 years now at this point in time, are all set up with the hardware that they can accept full FSD tomorrow. They already got the cameras, they got the chips, they're ready to go, right? Now, the other thing I'll say is, if you've seen electric vehicle sales in China, it's very clear to me that China wants to eliminate completely internal combustion engine sales of vehicles in the future, right? And so, being that they're taking steps like that, right? Because it's going to end up being illegal, literally illegal to buy anything other than an electric vehicle very soon in China, right? I wouldn't be surprised at all if it's illegal to drive a car in 10 to 15 years in China. I would not be surprised at all. In the United States, I don't see that happening in terms of being illegal. I think we're going to have people being able to drive cars for probably decades to go in the future because people will push back against that. But in China, when the government says we're going to do something, you got to go with it, okay? And so in this situation, when I think about a government that, think about it. Why would China continue, let's say full self-driving is perfect within the next 5 years. Why would still in 15 years from now, the Chinese government allow people to still drive? It's just putting a huge danger on the road at that point in time because the FSD systems aren't going to get into accidents, or if they do, it's like very minimal compared to humans, right? And so it's like you want to still have people, like humans actually driving. Okay, now you're just putting everybody else at risk. And the Chinese government, we know, if anything, they're going to play super safe. You saw what they did with Rona and the lockdowns and all that stuff. Okay, they play it far safer than the United States and everybody else for that matter, right? And so don't be surprised at all. And then, if it's illegal to drive your car in 10 or 15 years in China, well, who's the only companies that are going to be the most well-positioned? Well, certainly, the most well-positioned company is Tesla to thrive in that sort of environment overall, right? So that matters significantly. Now, if you check this out, right, this is a global comparison, electric vehicle revenue. China is by far and away the biggest market out there, and I don't see there ever being a day where China is not the biggest market. I think there'll always be the biggest market for EVs overall. I mean, you're talking about 1.3 billion people, more and more entering the middle class, and so even when the United States is full EVs, which is still going to take quite a while, right, I still think China is going to way overtake us in terms of revenue there. Charging stations revenue, right? This is like, look where kind of things were in 2023 and look at the expected increase of charging station revenue over the coming years, right? Now, if you think about one of the best positioned companies for this, it's Tesla. Have you ever looked at how many superchargers Tesla has in China? I was like going through the pages and I was like, holy smokes, man, this is insane how many superchargers they have in China. The more EVs on the road, the more those EVs are being driven, the more revenue Tesla can make overall, right? Now, I wanted to research this a little more. I'm like, how many superchargers do they really have? This was as of the fall of 2023, so I guarantee they got a lot more now, right? Tesla has more than 1,800 supercharger stations throughout China, comprising of over 11,000 superchargers, right? And they are allowing some other brands to supercharge there as well. Now, this gets us into the robo-taxi opportunity, right? Because if Tesla's setting up to have training in China for full FSD, that sets up for the next step, which is robo-taxi. And if you want to know something I could see being massive in China, I see robo-taxi. I think China's going to want to be a leader in robo-taxi. I think they are. And I think that's the most well-positioned market for robo-taxi opportunity in the world, just to be quite frank. Because when I think about it, like, if you think about the Chinese middle class, they're doing better, right? And they're making more and more money, but there's still a very small amount of money compared to somebody like, let's say, the United States. So to purchase an actual vehicle, there's the masses can't really afford to buy a Tesla or even a lot of EVs straight up. They have to buy used cars or they have to use public transportation or things like that. So if I think about the market that's the most well-positioned for robo-taxi opportunity, I believe it is China. I believe that will probably be the first major country to be a commonplace to take robo-taxis around. I think they will beat the United States in this, and I think they probably want to beat the United States in this. And so who's the most well-positioned for the robo-taxi opportunity in China? Guess who? It comes back to Tesla. It comes back to Tesla, right? Maybe it's them and BYD fight it out. I don't know. But all I know is Tesla is the only company that I'm for sure think is going to be well-positioned for the robo-taxi opportunity. And like I said, I think China is going to want to push this heavy. I think they would love to be the leader in the robo-taxi opportunity. And so China, like Tesla is just so set up so well in this situation, right? Now, before we get to Sofi and PayPal, I want to say one last thing in regards to this, okay? I mean, if we go back just 2 weeks ago, it was so negative in regards to Tesla. Everybody was throwing out their $50 price targets on Tesla, their $60 price targets, their $70 price targets, right? It's going under $100. I'm going to buy it when it gets to $80, all these sorts of things, okay? For you as an investor in the market, let the clownery be the clownery. Don't engage in the clownery, okay? If people want to throw out these crazy predictions and try to trade in and out of the stocks on a weekly basis, monthly basis, daily basis, let them do them. Don't engage in that. Don't engage in that, okay? Stay focused on the long term with these companies. You're going to do far better over the long term, okay? This whole, we're going to gamble in and out and try to play this perfect. And it's a losing game in the end, guys. We know how this ends. It ends poorly. So let the clownery be the clownery. Don't engage in it. Stay focused long term and let that be that. Okay? Very, very important. Sofi Technologies. Alrighty, so Sofi stock down 10 percentage points plus here today. Stock got absolutely leveled with their earnings coming out before the bell. Now, I saw this on X, and I thought, this is a good little screenshot to kind of, get us started here with our Sofi discussion. Sofi Q1 earnings, breaking news. Q1 revenue, $645 million, which beat expectations for $550 to $560. That's insane. Q1 net income, plus $85 million beat. Expectations were $10 to $20. Q1 EBITDA beat. Q1 members added 622,000. 2024 net income raised to 165 to 175. Previous net income guidance was 95 to 105 here, okay? Now, there's some monumental things going on with Sofi that's very important to understand. And I'll let you know if I was out there buying the stock here today, which might have been, okay? So, members, look at this. Up 44% year over year in terms of, I just call them customers, but Sofi calls them members. 8.1 million plus now at this point in time. Incredible growth. They're taking market share from the competitors, which are more like the traditional banks overall. This is phenomenal for Sofi, right? Now, if we look at Galileo accounts, they grew 20% year over year. And I thought this was something that was totally missed by the masses. And I'm like, I think this is important, guys. Okay, this is the largest growth rate. They grew 20%. It's the largest growth rate since 2022 for Galileo, right? They had 15% growth, 11%, 10%, 11%, 20%. So one is the trend is now growth. They went from 10% to 11% to 20%. That's phenomenal. But just having the best growth in Galileo since 2022, I don't think that's something that should just be glossed over there. That matters. And like I said, this matters significantly. More customers mean more of a long-term TAM opportunity, right? Total addressable market. Now, lending products grew 20% year over year. I think this could have grown faster if maybe Noto wasn't a little more conservative, which I don't mind at all, by the way. But 20% growth is still very nice growth for the company. Now, if you want some negative stuff, you're not going to be able to find much negative stuff in this report. I found one negative thing, okay? On a sequential basis, adjusted net revenue went down for the company. And on a sequential basis, meaning month or quarter over quarter, quarterly adjusted EBITDA went down for the company, right? And that is not something we witnessed back in Q4 to Q1, because that's one of those things I want to look back and I was like, well, did we see a similar phenomenon Q4 to Q1 last year, right? And we did not. There was growth Q4 to Q1 in revenue and growth in Q4 to Q1 last year in regards to adjusted EBITDA. So that's one of the very few negative things you can find. But at the end of the day, quarterly adjusted net revenue up 26% year over year and 25% quarterly adjusted EBITDA up year over year. I mean, those are still great numbers. Now, if that keeps falling and falling and falling, then maybe we got a problem. But, the growth that is a year over year basis always matters the most. Now, when you check out this non-GAAP guidance, they guided for 14 to 16% revenue growth, right? And they guided to adjusted EBITDA margin of 21 to 22%. And I think it's smarter to be conservative in the rate environment we're in. I think Noto's making the right decision. Once again, I think he could easily push growth rates much more than this, Anthony Noto could. But I think it's smarter, much more intelligent to go conservative. You got Fed funds rate. Here's the deal, okay? We've now had Fed funds rate at 5% plus for a year, okay? Which is extremely high from anything we're used to in the past 20 plus years, okay? So we got a Fed funds rate that's way higher than we've been used to for a year straight now, than we've been used to for the past 20 years. We're now going on a Fed funds rate of 4% plus. We're now going on about 18 months of 4% plus, right? And the longer the Fed keeps rates elevated, the higher and higher probability you're going to have problems in the economy, right? Things are going to break in the system. And so when I look at this overall, I think it's smarter to be conservative rather than go and give everybody a loan in the world, okay? I think that's just a good decision overall, a prudent decision to make sure Sofi is a lasting company for the long term. And that's what I really like about Anthony Noto. He's really guiding this company for the long term. He's not just like, oh, let's just put up an insane growth rate in the short term so our stock price can go to $20 or something like that. He's making sure this company is around through inflation, deflation, recessions, great economies, all those sorts of things, right? Fiscal 2024 guidance, I thought a few things were important here. The lending adjusted net revenue to be at 92 to 95% of 2023 levels, so that's obviously down year over year, right? And once again, that's Noto being careful. GAAP net income, so it's a generally accepted accounting principles, of 165 to 175 million. I love that. Adjusted EBITDA of 590 to 600 million dollars. I love that overall. So very happy about that. Also, in regards to the fiscal year 2024 guide here, they're talking about annual growth of 15 to 17% here. That looks good. And also talking about on a GAAP basis, 165 to 175 million. Now, check this out. They were at $301 million GAAP loss last year. If we look at the previous year, $320 million GAAP loss, 484. So this company just reached the infant stage of profitability. Imagine where their net income can be 5 years out, 7 years out, 10 years out from now. I mean, what a huge flip in a matter of just a few years, right? I mean, from nearly a $500 million net loss to now $165 to $175 million net income in a matter of just a few years. That's impressive, man. Diluted EPS talking 8 cents to 9 cents there. So the bottom line is getting where we wanted to see it, okay? At the end of the day, if I hold a bank, I don't want to just see growth rates in revenue and to customers. I also want to see profitability. You're a bank. You're supposed to make money, okay? So I love it. Love it. Now, in regards to Sofi, analysts have this company growing. This is looking at 1000xstocks.com, right? Next year, EPS, 160% roughly, right? We'll see if that changes. Sofi trades at a forward P of, we can call it 75-ish, somewhere around there roughly, right? And this is looking at analysts' expectations, but a lot of it comes down to, what do you also expect? But we can say 75. So is that insanely high versus traditional banks? Sure, 100% it is. But traditional banks have trouble growing their customers at all. SoFi is out here adding customers at a ridiculous clip of like 40% plus, right? They got very strong revenue growth. They got incredibly strong EPS growth and continued strong EPS growth expected. So overall, when I look at SoFi, it looks pretty flippin' flapjack and good. Now, did I buy SoFi stock here today? Well, yes, I did. I did buy SoFi stock here today. About 1,900 shares, $7.06 I paid for those shares. And yeah, man, I really like the risk reward here. I think SoFi's set up so well to continue to attract a lot of the young millennials, right, that aren't maybe committed to a bank already. I think they're also so well positioned to capture Gen Z and Gen Alpha. And so as those young millennials and the Gen Z folks, the Gen Alpha folks, as they get better jobs over time, make more money, their net worth goes up. I mean, SoFi's deposits are going to go up massively over the coming years. Obviously, their revenue from different categories is going to go up massively over the coming years. And they ultimately, the way I look at SoFi, they've built an ecosystem of products, right? And they're going to continue to build out that ecosystem. It's not like they're done. There's just like, they've already have a phenomenal ecosystem of products. They're going to be able to cross-sell these products to their customer base, right? Cross-promote. They already do all these ingenious things about like, if you have, if you set up your bank account to have direct deposit, you can get like a super high rate on a savings account. They already set these things up where if you sign up for one product and another product, you can get a lower interest rate. Like they do all these little genius things, in my opinion, that are really going to continue to push people into multiple products with SoFi rather than going to other financial institutions for those products overall. And so I think they're just going to continue to grow bigger and bigger and bigger because their ecosystem is going to get bigger and bigger and bigger, right? All they need to do is sell somebody one product, and then they got this other ecosystem of products they can sell, and I think it's genius, okay? Now, the other thing is weak banks are going to likely continue to go under with high rates like we have right now. So if anything, there's going to be less competition moving forward, right? And so that's just a little other food for thought in regards to that. So overall, I'm really happy with SoFi. I like everything that's going on there, and I'm looking to continue to add SoFi shares here and there. As I picked up, $13,000 worth of shares here today or so, I look to continue to pick up shares of SoFi, okay? PayPal, more earnings are in the morning. I will be live streaming tomorrow on Twitch, if you follow me on my Twitch channel. I will not be live streaming PayPal earnings. Those are before the market. I will be live streaming Amazon's earnings. That's a big stock for me. It's almost as big as PayPal. AMD, Supermicro, and Starbucks after the bell tomorrow. So I will be live streaming those. Now, in regards to PayPal, I'm going into this earnings with 3,105 shares in the public account. That's $208,000, right? I also have some leaps on PayPal that expire in 2025 and 2026. And then on top of that, in the Patreon portfolio, I built PayPal out to my biggest position in the entire portfolio. So it is a very important stock to me. Is it as important as a Tesla, a Meta, stocks like that? No. But it is a very important stock to me. Very important, okay? Now, here's the deal. I'm feeling pretty comfortable going into these earnings, okay? If we're going in with very sleepy expectations. Everybody worries about what's happened in this past quarter and the future quarter, right? Here's the deal. 4% EPS growth expected in this current quarter that they're about to report, and then 4% next quarter. That's sleepy numbers. Put me asleep. I like that setup. And then 6% and 7% revenue growth expected, sleepy number there as well. And then obviously you look to the EPS to the back half of the year, analysts are thinking negative. So, I like the setup. I really like the setup for this year. I mean, really like the setup. Now, the question is this a quarter Wall Street's going to start to show some respect to Alex Chriss? I said they, but it's really Wall Street, right? And we'll see. If they come through with beats across the board, a guide up, a good, strong conference call, I think this will finally be the quarter where they have to start to show Alex Chriss some respect. And when I say respect, what do I mean by that? Right now, they show Alex Chriss and PayPal no respect at all. How do you know that? Well, you look at something like a forward P on a stock, and PayPal trades at a forward P in the 12 range right now. That's no respect. When you're trading at that sort of valuation, I mean, other big techs trade at, forward Ps in the 20s and 30s, or even the 40s and above, right? So the fact that PayPal's at a 12 with, pretty strong revenue growth of 6-7% we're looking at here, I mean, that's no respect. I love to compare stocks on 1000xstocks.com, right? Which, if you're looking to join the waitlist for 1000x, we're now at I think 330 people deep. So go to 1000xstocks.com, join the waitlist there to get access to this. We got monthly plans, yearly plans. You can compare 3 stocks, but I just wanted to compare 2 against each other, right? Look at PayPal versus Square. PayPal trades at a far cheaper forward P. Almost half that. Trailing 12-month P for PayPal is at 16. For Square, it's at 4,693. A PEG ratio on PayPal is 0.79. A PEG ratio for Square is 6 plus, right? And the lower, the better for the PEG ratio. Gross margins above for PayPal over Square. Net margins above as well. So if I look, I'm just Wall Street is so disrespected PayPal stock, and I think the disrespect is eventually going to come to the end. Does it come this quarter? Maybe it finally does. But there's no question in my mind this stock should be a $100 plus stock. But it's not. It's a $60-something stock right now. And maybe this is a quarter that it finally really has a true breakout. I would love to see the stock pushing 75 plus tomorrow. If it goes lower, I might have to add more shares. But I'm not fully convinced it's going to go lower. We'll see. It should be very intriguing, right? And once again, I'll be live streaming on Twitch tomorrow, okay? Hope you guys enjoyed today's video. As always, appreciate y'all joining me. If you're looking to apply to join my private group, then go ahead, click the pinned comment down there, fill an application. Once you join us in there, we'll send you over your Steel membership card. Where's the 2024? There we go. We'll send you over your Steel membership card. Once you join us, send that baby over to you. And then, once you hit 6 figures in your portfolio, we're going to send this over to you complimentary, the big heavy diamond award. This thing's a beast. And then once you hit 7 figures plus, we send this complimentary to your house, which is the 7-figure award, baby. Woo-wee! Oh, yeah. It's in your future. It's in your future, all right? All right, guys, much love as always. Appreciate you joining me. It's busy, busy times. From my bald head to you, have a great day.